Nasdaq out with quarterly results. Those earnings coming in at 85 cents a share. That was 4 cents better than the street was expecting. Revenue was up by 13% over the prior year to $1.3 billion. That was also ahead of expectations. And Nasdaq also saw the highest number of first-half listings since 2021. The stock right now up by about 1.1%. And joining us is Adena Friedman. She is the Nasdaq CEO and chair. And Adena, I was looking through some of these numbers. I want to dig into what's exactly driving things. But then I was looking back at the stock, and I just want to say, over the last year to date, up 14%. Over the last year, Nasdaq shares up 40%. Over the 5-year period, more than doubled, up over 100%. I don't think we give you enough credit for what you've done with the company here. You've been on a real tear. Let's talk about what you've been doing, because I think that shows up in these numbers, too. When you look through some of these numbers, $1.3 billion in net revenue, but $991 million of that came from solutions. What is solutions?
Yeah. Well, thank you, Becky. And we are really proud of the results for the quarter. As you mentioned, 13% on an organic basis, which excludes the FX impact. It's 12%, and 24% on EPS. And they're really coming from all of the businesses. So as you talk about our solutions businesses, that's our Fintech business, where we provide technology to the financial industry across anti-financial crime, risk management, trading infrastructure, regulatory reporting, all those mission critical things that banks need. And then also within solutions is our index business, our listings business, and all of the solutions we offer to corporates and investors. So that is that $991 million.
The other stuff that you've put in, though, the Fintech, and the solutions that you're offering, I mean, it strikes me as that's a really good way to insulate against the ups and downs in the markets.
Well, it creates
broaden out your revenue.
It creates more recurring revenue, as you mentioned. So our Fintech division, we were up 10% on the quarter. We're really continuing to show real consistent, as you said, consistent results in that business, because those solutions are so important for banks, for digital transformation, for modernizing their markets, but also modernizing their infrastructure and rooting out criminals. Such an important thing that we do with the banks as partners. And then, of course, our index business is the other amazing grower within our organization. We had 17% growth in the index business. We now have over $700 billion in assets under management there. So that's another area where we're leaning into the future of the economy with our index products. We're partnering with our industry clients as well. So when we can partner with whether it's investors or banks or brokers, other exchanges around the world, that's where we can be successful, in addition to, of course, running great markets.
I would guess that the Fintech is also the place, though, that may give you the most concern about making sure you stay ahead of the pack, because you really have to be on top of things to make sure that there's not somebody else who comes in and steals some of that business. How do you do it?
Yeah. Well, first of all, we've had to operate in competitive markets for many, many years, and we've been that upstart competitor when we first started. So we have a very strong competitive spirit. We all are always looking at the future of technology. What could disrupt the industry? What are the mega trends that are going to define our industry?
Yeah, what are they?
We go through that actually every year, and we look out 10 years and we say, what are the things that are going to define our industry over the next 10 years? So we obviously focus on cloud. That's been a huge area of focus for the last decade. Yeah. We're continuing to bring our markets into cloud, drive other markets into cloud, bring all of our solutions and make them cloud native. That's been a huge area of investment and opportunity for us. And now that we've done that with modern data management, now AI, of course,
right, and
is the next trend that's just incredible.
So
that's
how do you work with AI? What happens? How does that change the landscape?
Yeah, well, AI is both, I mean, it's a huge opportunity for the industry, but it's also something where we have to understand what risks are coming in as well. And in anti-financial crime, we're using AI to help the banks protect against those criminals who are also using AI. So we have some new capabilities that we've brought into our anti-financial crime technology just this quarter, which is really cool. Agentic workers that are coming in essentially to take all of the alerts that we generate, which are also alerted through AI. We then allow our firms to do all of the reviews, make sure that they're doing all the assessments, the reviews, the writing up of the reports, the submission of those reports, takes down the workload by 80% once the alert's generated.
And just to be clear, for those who are not clocking what you just said, agentic workers are not real people.
That's correct.
Right. Okay.
They're agents. I call them agents. Our team calls them agentic workers. I like the idea of calling them agents, because you're right. They're automation that allows these systems to basically self-generate capabilities as opposed to having analysts do it.
Okay, while we have you here, because the other, I don't know if it's a challenge or an opportunity for Nasdaq, but there's a big debate taking place about this idea of tokenizing private companies, whether they stay private for longer, what that means to public companies, what that means to markets. What do you think of what's happening right now?
Yeah, well, first, I want to say that whenever we look at innovation, we always have a positive approach to innovation. But we also look at innovation always from the lens of what's good for investors. And we also look at innovation in the context of does it improve the liquidity, does it improve the transparency, or does it improve the integrity of the markets and the investor experience? So in tokenization is a technology. It's an enabler. How it's used, it really defines what the investor experience is.
Okay, then let's make it different. So there's this idea of the accredited investor, which historically has...
And I'll get there.
Okay.
Yeah, so I think that when we look at public markets, private markets, and using tokenization across those markets, the first thing I would say is I really liked what Chair Adkins said the other day of let's make IPOs great again. We've been engaging heavily with the SEC on what we can do to lower the burden of being a public company, to make it so that the public markets are the ultimate destination for every company. But we have to take a step back and realize there are changes across proxy, disclosures, litigation, reform. All of those things need to be reformed in order to make it so that the public markets can be vibrant. But on private markets, you know, the thing that I just said, liquidity, transparency, integrity. There is no transparency for investors of the performance of those companies, the risks of those companies, the operating cadence of those companies. So we have to be mindful of just because the technology exists doesn't mean you have to kind of put the guardrails around it to make sure that the investors have the information they need to make informed choices. They have liquidity to get in and out.
Do you think
and there's integrity.
So do you think long term, if this private market develops in this way that people are describing, where more people have access to the private market, that the public and private markets converge, if you will, meaning the private guys are going to be disclosing a lot more, it's going to start to look a little bit more like the public market? Or do you think that they diverge and that there's sort of two very different worlds, a very public market and this sort of private market that's maybe more opaque, but people are willing to take that risk, and somehow this administration or other governments decide that that's okay?
Well, I personally think my personal view is that it's more likely to converge. Because at the end of the day, as I said, let's start with the investor experience. Why do public markets require as much disclosure as they do is to give investors equal access to information, to make it them as accessible as possible. We have a lot of rules on market structure to make it so investors are protected. Those are really core tenets of opening up the aperture and allowing everyday retail investors to put their hard-earned savings into those companies. Therefore, as we look at how do we make those companies, the private markets, more accessible to the everyday investor, potentially through funds and other constructs, let's also reflect on the disclosures and other things that might come into that space. So, for instance, we have Tape D, which is the Nasdaq private market, does facilitate private company transactions. And we have created a tape with the Nasdaq private market to allow you to have some transparency on the prices that are being discovered in the private markets to give investors better disclosures and transparency.
So that's directly competing with all of these new companies that are talking about the tokenization and trading there?
Well, actually, the Nasdaq private market, we do it in connection with the company. So we always are working with the companies to allow that transparency and that liquidity to occur. So that is a kind of a different way to approach the problem. And those are for accredited investors. So those transactions only occur with accredited investors. So it's a little bit of a different take. I think tokenization is a great technology. We are very engaged in tokenization across securities, traditional securities, crypto, elsewhere. We're a technology provider to that whole ecosystem. But as you bring it into markets and you allow and open that aperture to retail, we just have to make sure we're thinking about their experience first.
They're going to kill us.